The oil price could be overtaking developments in Europe and in China as the big worry for the global economy. Indeed, the latest report from the Economist Intelligence Unit warns that the growing tensions with Iran risk a 30 to 50% rise, a major shock. Well, Grant Williams is our man with an eye on the big picture. He's strategy advisor at Vulpes Investments and author of the investment newsletter, Things That Make You Go, and he joins me now from Singapore. Grant, welcome up there.
Hi, Tiki.
Now, the Economist Intelligence Unit is talking about this possible shock within weeks as a result of the Iran-Israeli tensions. Do you agree with them?
Well, I don't think any of us know if and when any such action is going to come. I mean, it really would be a big shock for something like that to happen before the US elections in November. And I read their report, and yes, they're talking about a 30 to 50% spike in the oil price. That would potentially be a fairly short-term problem, but it's definitely there. It's something hanging over the markets. It's been there for a while, and here we have Brent crude up at $126, which is pretty close to the highs we've seen recently.
So you say it could happen. If it happens, it could happen for a short period of time. But 30 to 50%, what would that do to Europe and indeed America?
Well, any recovery that we were seeing globally, and there's a lot of argument backwards and forwards about whether we are actually seeing any kind of self-standing recovery, it would certainly put a stop to that pretty quickly. So it would be a serious concern for everybody. I mean, we've seen releases from the strategic petroleum reserves in the States and the UK recently in an attempt to bring the price down. But everyone is talking about the supply side of oil, and obviously, like everything else, it's a two-sided equation. We have demand constraints on the other side as well, and even though the Western world has seen oil use decline since the high price in 2008, the Eastern developing countries, their demand for oil is increasing every year, and it's at the moment it's pretty price insensitive demand increases.
I was looking at a chart that you have out on the net at the moment, and it's quite amazing. The most exposed to an oil shock are some of the Asian countries, Malaysia, Singapore, Thailand, Taiwan, Korea, and indeed India.
Yeah, absolutely. I mean, and Japan, I see in that chart, Japan's a little way further down that list, but, Japan has started to use a lot more liquid natural gas. They realise that they're very, very dependent on the oil price being reasonably low for them. And here in Asia, Singapore particularly, is it certainly does have issues with a rising oil price. Malaysia, perhaps a bit more surprisingly, but those are the two countries that will be hurt the most.
Even if a real shock doesn't happen, prices presumably are going to remain high. Will that also impact the pace of the recovery in the US and presumably inflation in Europe?
Undoubtedly, a rising oil price is one of the most inflationary things you can have because everybody needs to use it, and it's something that isn't included in the CPI in the States, which speaks volumes. But yeah, if we get a rising oil price, it will crimp demand. There's no doubt about that, and it's something that the world just can't actually take at the moment with such a tenuous recovery going on.
Now, Grant, China seems more resilient, according to the same Economist Intelligence Unit. They are forecasting 8% growth this year. I assume you don't agree with that.
Oh, look, China's in a position that there are two very, very strong arguments. One for there being a huge slowdown in China, and one for them kind of muddling through and keeping things together. Now, to be honest, I think it's a little too early to make that judgment. Both sides' arguments are fairly convincing, but what you do have is a huge bad loan problem in China, and you have the problem that their two biggest clients in Europe and the US. Consumer spending has been pretty weak, and so if they don't get a recovery in the consumer spending from the West, then they're going to have to try and switch their own economy to more consumer-led, and that's a much bigger task than you would think it to be. So China certainly has its issues, but I honestly think it's a little too early to make a call on the hard landing or not just now.
And briefly, they are pretty immune to oil prices, or more so than other countries in Asia.
Well, they're not immune. Nobody's immune. That's the one thing I think we can say with certainty. Nobody's immune to a rising oil price. China have reserves. They have been accumulating those reserves, but they're as much subject to those rising prices as everybody else. Believe me.
Grant Williams, very interesting. We'll follow that oil price very closely. Thank you very much for joining us.
Pleasure.